Let's start off with the overall markets picture. We're currently sitting in positive territory. 2.3 billion rand, though, passing through the market. Light volumes. How much really hinges on the rhetoric coming through from Ben Bernanke later on today? Are we going to be disappointed if we don't see any kind of commitment to more stimulus?
Yeah, I think everything is waiting for him later on this afternoon. Whether you're looking at commodities, whether you're looking at currencies or equities, everything is waiting with bated breath for his announcement this afternoon. Unfortunately, our market will be closed by that time. However, we've got GDP numbers also coming out of the United States. The expected is 1.1% in quarter two. And, should that disappoint to the downside, I think we'll see a lot of selling. In anticipation of what he's saying, but I think we're looking forward with Bernanke's statement. We want to see where he sees the economy going, where he sees the stimulus being needed, rather than the quarter two GDP numbers, which are retrospective and things that are past. So we just want to see how he will stimulate it. So I don't know how much of a reaction there will be to those GDP figures, but also the UK came out with GDP figures earlier on today. They were relatively flat at 0.7%, and the market reacted ever so slightly to it, but I think we're waiting for the biggest economy in the world, the United States, to announce.
Well, let's delve into some of the corporate news out today. And again, we've seen a slew of corporate earnings out this week. Let's delve into Mr. Price. We saw first quarter sales increasing by 9.2%, and that's from 6.7%. And again, a very strong cash element that has come through for the likes of Mr. Price. What is your sense with regards to this? Because the share price is down around 1.5%.
Yeah, I think it missed estimates, and expectations were a little bit higher for Mr. Price, and it certainly didn't perform as well as its competitors such as Truworths and Woolworths, especially Woolworths with the new range that they will be introducing. That's going to give Mr. Price a run for its money. But yes, as you mentioned earlier, the cash reserves are remarkably high, and that adds value to the shareholder. However, they are going to be looking into maybe investing it into Nigeria and seeing business there. However, we have been disappointed, with the performance so far, and I think that's why it's been punished so much today. But we still have a hold on it as a stock in Nedbank, but it has taken a little bit. It has been taken out of bed today.
Would you say that it's an opportunity to come in and buy Mr. Price, or do you think that the risks are heightened now that it's going to be a far more competitive space for Mr. Price going forward?
That's exactly it. There's far more competitive, space for it now. I think, my recommendation would be maybe a closer look at Woolworths and seeing how they've improved their business so far, and how they intend to improve going forward. I think that's more of a safer bet for me than it is really for Mr. Price.
The likes of SAB also on the front foot today. 10 banks backing the $10 billion bid for Foster's. It's also a very interesting one because it could actually turn very hostile. In fact, it has already. Your sense of this, because a lot of criticism has been put on the table with regards to heading into a developed market space.
Yeah, I think it's a good way. It's a good direction for SAB. I think the hostile bid has been very well received. Look, since they have announced, it's been very choppy trading for SAB. But today is an update. It's a good day. They've announced that 10 international banks will be financing the hostile bid of $12.5 billion. And they are paying up quite a bit for it. They're paying about 90 basis points over LIBOR, which is not cheap at all. But I think the market has been not against it, but certainly not too much in support of it. It's been choppy, like I said earlier. It's been choppy, but I think time will tell, and we'll see what will happen with the hostile bid.
Let's touch on Implats. It's also on the front foot today. Of course, a lot of news out of the company yesterday. We saw headline earnings per share for the first half increasing by 41%. And again, we turn our focus on indigenization and a lot of talk of nationalization. Do you think investors are putting this rhetoric aside and just focusing on the good numbers?
Yeah, after the teleconference yesterday, they were punished quite a bit. It went down about 2.6% yesterday. And I think the market today is thinking that was a little bit overdone. And also the statement, to the Zimbabwe government saying that they've got between 5 to 10 billion to invest in Zimplats or in Zimbabwe mining ventures, but they're reluctant to spend that money if the 51% BEE, proposal from the Zimbabwe government holds. I think as a company, they are still keen on empowerment. However, they believe that 51% is a bit too much. So the market really looking at it and saying, okay, look, they've got some cash reserves aside. Hopefully the Zimbabwe government will relook at it. And, they are the South Africa's platinum mine that is most exposed to Zimbabwe. So, and that is a very, very important asset for Implats. And, they look at it very carefully. So I think what we're seeing today is a rally because it was so overdone yesterday, and also with some positivity or some hope that there'll be a revision to Zimbabwe's stance.